I forgot to click the going live button, man. I need to get used to it. Good morning, can you guys hear me? All right. All right, how you guys doing? Can you hear me? Check, check. I keep forgetting to click start stream on YouTube as well. All right. I'll forget today. Check, check. All right, good. We're good. The balance is out of whack. Is the music too loud? Good call, good call. How about that? It's a little bit better, right? All right, cool. What's up, Garrett? Good morning. All right. You ready to go, team? I know I keep forgetting to... YouTube Live has changed. I have to push different buttons now than I used to. That's a little bit better. Oh, get used to that later. Good morning, good morning, good morning. I sound too loud, or you sound too loud, or the music sounds too loud? Okay, I'm scooping up some Apple right here. I got some Apple calls. I'm still in those October 21st, 150 Apple calls. Perfect. I grabbed them right here. We tipped that hedge pressure. I am doing exactly what I said I was going to do. I want to make sure VIX and everything looks good, then make sure we're not too crazy unstable. I know we are breaking through risk interval band, so I'm going to bet that we are going to survive this red line and be okay. Let's look at the jobs numbers that came through. Again, I might trade on it until Monday, but I think that this is the dip that we wanted to see to start the day off. Okay, we'll read the news really quick and see what's going on. Clear all. I think I always... I don't know why it doesn't say my settings. I'll have to see if I can log back. Maybe I'm logged out. Apply these filters. Let's go. All right, let's go read what it is. We've been talking about the jobs data all week. Coming through. We had non-farms today. Non-farms were a beat, right? Good news is bad. Unemployment rate also down. So jobs data is looking healthier. It's a tick down. So obviously bad news is good and good news is bad. We talk about that, and here's the good news, and the good news is being reflected as bad. Oh darn. DD is 0.45. Okay, so you're at the lower band. Okay. Let me see what's going on here with my perfect. So we had a downtick in the data. The forecast was going to be worse on the unemployment rate, but it came in a little bit better. So that's good news for the unemployment rate. And of course, we're going to talk about the non-farm payrolls. This is going to be one of the more important of the two, I'd say, in general, because people are looking at the change. The change is actually less than what it was before, but it beat the forecast. So in general, right, the decline is, this is probably the good sign I'm looking for. You want to see that the market is, essentially that the improvement of the labor market is tapering off. This is change, right? This is month over month change. So if the change is getting less, it means fewer and fewer people are getting employed outside the farming industry. So looking at that, we're seeing that there's obviously some negative data there, some negative impact. I'm gonna take a bet that right now, do we sustain ourselves a monthly hedge pressure or not? That's what I'm looking for. We dipped to monthly hedge. I'm taking along on Apple right out the door, just to see if I get that. Feel free to do me a favor right now. Can everybody go do me a favor right now. Go in there, click like on the stream, scroll down, it takes 2 seconds to do it. Make sure you retweet us if we're posting on Twitter. That would be really lovely. Retweet us everywhere else. Go post us on any place that you could see that we got social media. Give us that love. Give you that love back. And also made a small video today. I want you guys to go check it out. I'm going to do small videos, and even if you don't watch it, right, just open it and minimize it and just like listen to it. because it's solid gold. I'm not gonna lie. Everything is super solid gold. Just kidding. But yeah, it really helps out. We love you guys. Thank you guys. Got y'all love for y'all. Okay. You'll see on the screen, full screen. Okay, cool. Wait. Oh, I'm dark. Wait. That's what was missing. I knew something was missing. Let there be light. Good morning. Hello. See, I'm sitting here all morning. I'm like, I know something's missing. I rebooted my computer, and that is partially why things are late. Should never reboot my computer. Okay, so question I have is, starting Monday, I think I'm gonna have my wireless mic, so I'm not gonna do the this guy. Like talking like this. Nice little lapel mic here. All right, so let me see what I got to play with here. Okay, let's run the scanner really quick. Xavier SU on Apple. Let's do SPY, double checking this. We fell down. I don't know if I should do like that. I think I had it like this. Okay. Take a look. Looks like SPY's pushing right off a monthly. It's exactly what I said I wanted to happen. I want to dip to monthly, get that long right out the door. Good morning, Priscilla. How you doing? How you doing today, girl? Okay. How's Florida, by the way? Are you liking the new environment? QQQ is looking a little different with a resilience to less than S&P. So QQQ is going to be the weaker of the two today. The tech sector is going to be probably what a lot of these issues are going to be with on the, I guess, the volatility side today. I am looking at some plays here. I'm trying to dig out. Okay, so looks like QQQ right at monthly hedge could get the break. That is the momentum we want. So I want everybody to pay attention. 275 Q today is going to be very important. And let's actually go through some, we have long downs, right? Let's do some short up and long downs and look for breaks. Short up, long down, short up, short up. Down, long and down. I wonder if they're pushing that release live. Let me double check with my team really quick. Did we go live with it? I don't know if we got the new scanner settings. We did not. Okay, it looks like it's not out today, but we'll check it out for tomorrow. Okay, QQQ, let's look for some breakouts. I'm gonna start by distance from hedge pressure. I'm gonna find ones right on the edge. Amazon look pretty good. So right on, it's just, everything's gonna be basically the same. We're gonna look for moves to hold or lose hedge pressure for today. So Amazon 117.5, a move from here to here is likely gonna be somewhat of a retrace with half gap. Resilience being less than 0. Obviously, any upside today, I'm going to be limited to probably half gap until that resilience does change. Now, yellow resilience is the tiebreaker. Yellow, we're seeing right here, we have this nice little yellow line sitting right at 0. So that's one thing we're going to watch. Sure, if you guys, your first time here, do me a favor. Head over to rockscooter.com. You can check out this platform that we use with our scanner and all of our cool stuff. And you can check it out for free. Here's the link right here, link down in bio. Good morning, Greco. What's up? Rian Fernandez, are you already long out the door? Yes, I am. I grabbed Apple calls right out the door. Now I'll be very careful because VIX is about to break that one risk interval. So let's talk about this. This is all the signs that we have to look at market irrationality. One of the particular things that you guys need to be very familiar with here is our stop rules. So if you go to our Discord, the link is in the bio. So scroll down. Can I tell you something? Look, I've been losing so much weight lately. I have moved to the innermost of my belt right here. Like seriously, like see right here? Like I'm in the innermost part of my belt and it's still loose around my waist. Don't I look super like scrawny though, right? I mean, I've been like working out a lot, but Cole says I look too thin. So I'm like, I need to like eat ice cream or pizza or something to like fatten out. But yeah, so anyways, I need to make another hole in my belt loop or another hole in my belt. Awesome explanation video yesterday. Oh, thank you, Andy. Appreciate you joining in. And we're going to talk about something else new today as well. So stay tuned. So go to the Discord, links in the bio. Discord is free. Make sure you get the free trial, get access to all this stuff. Stop rules will show you these things called irrationality flags. Irrational markets have a specific thing that we look at. We get out, we stay out, close down, enjoy your day, whatever. Say me. I close down. This is my rules. So I will not do anything when irrationality flags. I try not to do much, because when the market's irrational, you can't predict anything. There's nothing going on. You have solvency problems, liquidity problems. These flags are telltale signs that you're not gonna be able to predict a single thing in the market. All your indicators will fail, I promise. So number one on the list is when VIX travels more than this one risk interval for the session. What is risk interval, you may say? Well, there's another bot, and all of them are here, or our videos will explain what they are. Risk interval, we update it once a week, and this is a calculation that we invented that looks at, it's an exploit of something that looks for hedging in different areas of these futures contracts. So VIX has a number that says 280, right? So what you can do is you can go all the way over here. You can put in VIX, for instance. I'm going to use Thinkorswim to show you. In VIX, well, actually, you know what? I'm going to not do this one. I'm going to pull up my quad chart here. And on VIX, let's double click on this guy here. Change my diet. I've been working out 5-6 days a week. Mostly for health, but also because my team has been telling me I've been becoming an irritable asshole. So mostly to blow off some steam and to get healthier. So I'm looking good. So yo, Alec, what's up, bro? Thanks, appreciate it. You know what I'm saying? I'm kind of being a dick. I'm not gonna lie. So I'm trying to be like less stressed out and more like, you know, work out that energy. Just kind of be chill. So change diet, yeah, eating less, just eating less in general. Don't eat breakfast, don't eat lunch. Do a lot of stimulants like coffee and things like that, just to kind of like keep me from overeating, but eating like really heavy around like afternoon, and then eating really heavy for dinner. And I can't gain weight. I'm trying to gain weight at this diet. Like I just completely started shriveling up. So, so VIX risk interval right here. Hey Art, thank you, man, appreciate it. I know, right? I used to be like much more with my glasses on, it looked worse, right? Welcome to the stream, everybody. I was like me, right? So look, yeah. Well, Priscilla, you saw me what, like 2 months ago? It's even a big change in like 2 months, right? Yeah. You're inspiring though. Like we went on a health kick ever since you gave me that. You gave us that. She works for this company that does healthy dental hygiene products like toothpaste and mouthwash and stuff, but it's all like non-toxic. Like you can literally drink the mouthwash because it's made of like aloe vera and coconut oil and stuff. And we went on this immediate health kick. I was like, everything that's just like toxic, just like purge it out. So yeah, you completely inspired it. So by the way, whatever flu was going around made you have a short fuse and avoided people for a week. Yeah, right. I know. 1 meal a day basically then. Yeah, 1 meal a day, but then I also like load up before I go work out. Like I'll drink like a peanut butter and banana smoothie or something. But mostly it's just working out and it's lifting weights. If you guys want to know the trick to lose weight, it's lifting weights. Maybe cardio, but in reality, just do lifting weights. That's it. It's that's the biggest calorie burn that I found that I get. So cardio, I don't feel like I ever lose weight. I learned back in my biology days was that you exhale your fat as carbon dioxide when you lift weights faster than you do anything else. So if you're feeling a little scrawny, concentrate on compound movement only in the gym. Yeah. Well, scrawny, but like not scrawny skinny, but like just thin. Like I'm thinning too quick. Okay, back to what we're talking about, risk interval. Okay, so what this is a $2.80 distance on VIX. You guys see this right here? And so the distance from here to here is $2.80. We're nowhere near that distance, so that irrationality flag doesn't count. So what irrational actually is a it's a condition of the market where liquidity can't be found. It's just the market is so sporadically all over the place. The market makers can't gauge where buyers and sellers can be. We throw everything out. Liquidity map, goodbye. Trading strats, no way, Jose. Stop rules, yeah, let's take a look at those, right? Entry rules, no new entries. So in reality, stop rules will explain what irrationality means. And right here, any position that triggers irrational rules in a losing trade, I will exit no matter what. They're like, better safe than sorry, just get out of the way. And of course, having rules that tell you, you know, it's not a good day to trade the market is never a bad thing. The hardest thing that I ever found as a trader really was to have some kind of dynamic that teaches me that the market's not a good indication, or it's not easy to trade the market. It's not just trending now, it's not just trending up, it's whipsawing. It's gonna be hard to imagine where it's gonna go. So the market could just continue to crash out today. It could V up and rally. It's really hard to say. It can just chop around and burn your premium. So irrational flags or emergency exits if you're wrong. For a losing trade, the first rule that triggers on the list will exit no matter what. For a winning trade, the first rule triggers on the list. I trim most of it and let a little bit ride the rest of the way. No revenge trading or over trading, learn to take a loss. These are things that we do teach. If you guys are interested in learning how to trade and how we trade, straight up, this is what we do. So feel free to join that free trial. No credit card required. Just sign up. Takes literally like 1 second. Going forward, the S&P opens beyond one risk interval the previous day's Globex close. This is IE doomsday, and now it's kind of like right, and it's another bot we have. This bot will tell you what we have here. The bands are set by one risk interval distance from the close of the previous Globex session. So let's pop it up. NASDAQ clearly is outside of the band. The S&P clearly is outside of the band, right? So this is also irrational. Nothing inside of here will give you indication what the market can do. It can continue to collapse today. It can come right back up and tuck back in. My bet is that we are back in and going back in. So we'll see how that works. But we hit these resistances that I have pinpointed. And again, this is why red lines and yellow lines are so important with NASDAQ and the S&P. You have to make sure that you keep tab of where these lines are. These little run-up lines here. These are where your yellow lines are calculated from. These are resistance points and pivots. Anytime you touch one of them, there is a massive amount of volume. And I'm not going to lie, all of our calculations predict volume. That's what they do. And so here's another one, right? The minute you touch this line, this massive volume spike, you can't lie. So we are the guys and girls here that predict volume. Here's your volume spike at that level. Every calculation we tell you is going to show you the only points that matter in any price move. Forget your indicators, forget your nonsense. The idea that if you wanted to buy the dip, you're waiting for some place to buy the dip. If you wanted to short, you're shorting to some place where there is resistance. So where you have volume pivots is where I plan my entries and exits no matter what side I go. So in this particular case, this is called a run length red line. This is another calculation we teach. But we're irrational, right? So we're not going to make any drastic moves. I think that, I keep saying we, it's only me trading by myself here, but I'm not making drastic moves. You guys can make all the drastic moves you want. Good luck to you if you do. Okay, if UVXY is off of a call wall or bounces in the bull zone boundary. So VIX is very weird when VIX has bullish positional risk. It's just like a hedge pressure break. It's very violent to the upside. If there's a catalyst, we'll exit both the winning and losing trade if you go one risk interval from the anchor point of the catalyst in the index. So an example is the catalyst was here. And again, we've had like 3 or 4 rules triggering today, right? So let's go down to the risk interval again. On the S&P, that distance is 2750. And again, we have an algorithm that calculates all of this. So off of whatever the S&P was, that little distance here, 2750 would be 4250. And we clearly have passed it up. So anywhere past here, then that's triggered. So a good rule of thumb is to mark that rationality distance as well. So this is still considered, even though it pops back in the band, we're still going to consider this irrational as well. Like the market has moved off of the anchor point. Let's just say it was like 60. Thinking like let's actually draw it. So in reality, like right now, the market, like I wouldn't be coming in trying to short this to 0, right? Perfect. Like personally, I'm just going to kind of mark this real quick. Let's go find that anchor point. This is a technique we teach. These are illiquidity pockets and one directional moves off of a catalyst. You know, clearly we have one guy right there. We'll mark that anchor point. Your red lines will be pivoting the market, and we'll have a downside yellow line from the sky if we do. And then of course that risk interval will just kind of make it. Some quick math. I used to be good at math at some point. 2750. 41, 4075. I think that's the math. If my math is wrong, let me know. I'm just going to kind of draw a green line here just to kind of remind myself where it is. So again, we're just prepping for the market to recover. 40, 75. I think bad news is good. Good news is dad. Good news is dad. Good news is bad. Good news could be dad. I don't know. Good news is bad. So this is the distance for the irrationality on the catalyst itself. Just to remind you, cat, we'll just put a little marker here. Right? Go ahead and put a label on there. There's nothing wrong with labeling your chart. Put this bad boy here. I don't know if we can. There's an arrow. Ooh. Oh, snap. Okay, perfect. Dude, I've been so long since I've kind of done this. Okay. All right, let's get off the tick chart though. Don't you guys miss though? Hey, let's be honest. Don't you miss listening to no copyright house music? Oh, those are the days. All right, so this is lower doomsday band, also rational. Rational outside. Right, so irrational markets are mostly just like educational days, right? So even inside of here, still irrational on the catalyst. So we still have that non-farm pushing the market. The market's not going to make any sense until we're back up in here. The catalyst is clearly pushing the market lower. So kind of wait on this one. I don't like to come in there and try anything off of it. I'm in the boat, literally in the boat, that this needed to happen for the market to start to move higher. Let's just put the halfway point in the S&P really quick just to see where that kind of retracement area is. Just in a general sense, it's about 37. Okay. So this hour and next hour will likely pip inside of here. If I were in a long scalp for myself, I don't bet the irrational markets become rational. So any upside move probably limits to there. But like I said, I don't see anything that's showing signs of life to move higher perfectly right now. Let's read some of your comments here. Peanut butter banana smoothie, dude, so good. I buy like the typical American. I mean, it's like the peanut butter powder, right? It's not actual peanut butter. So it's like freeze-dried peanuts. I don't know how they do it, but you scoop a powder, scoop and a half of protein, throw in a banana, some ice and some milk, man, and you're good. Let's give me the volume spike at hedge pressure. MHP usually happens at the first touch unless stronger volume spikes every subsequent touch. That's usually what's observed, Jason. The first touch is where the positional shift happens the most, and then each time you touch it subsequently, like pretend that your firm was like in no position, right? And you sold some calls, and then market pushed up into those calls, and those calls went in the money. Your algorithm would accumulate those shares, and as the market's kind of bouncing around that, you might dump, you know, a couple shares here and there to like balance your delta, but the change in delta, immediate change in delta, or that high gamma, is the burst that you'll see the biggest change in position. So you might see like volume spike in a case study. You know what is believed, and let me see if I can get my drawing tool here. You guys do me a favor, everybody, scroll down really quick and like the stream if you don't mind. Click that like button, leave a comment today too, help the algorithm out. We're just getting back. We used to have thousands of people watch our stream every day back in the day. Oh, those were the fun days. We had so many people come through. So help get the word out. Tweet us, retweet us, tell your friends. We're excited to be back on YouTube. Like I said, it's like a lie. I've been working out so I can kind of look good when I get back in front of the camera. But I still look hideous. So, I mean, you know, but the Botox is supposed to help. So we'll see if that works. I still look like an ogre. So, but I'm getting there. I'll be handsome one day. So the idea, and I'll talk about the conversions in just 1 second. So the theory is, pretend that this is hedge pressure. Let me pick a non-black color though, because it's hard to see. Pretend that this is hedge pressure right here. If you were to do this and do this and do this and do this and do that, in theory, if all things are being equal and no positions change, the volume should do this. People have, and the reason it would decay is because people have different tolerances to theta, but technically speaking, each subsequent bounce should not be as impactful as the first one. It is random, of course. You will likely see volume probably random all over the place. But if you had infinite taps over infinite iterations, over infinite time, it would have a pattern that looks like this. If you were to take every time hedge pressure bounce and sum them all up and look at the patterns, it should technically have a decay pattern, because technically you would expect the first instance of the tap to be the most impactful. Plus hedge pressure has the ability to likely translate in a Cartesian sense, which means move somewhere. So hedge pressure as the day goes by could actually be impacted by options that are being bought for that expiration. Like for instance, today, hedge pressure could be very much affected by today's trading. So usually not enough. Hedge pressure for the most part stays where it is all day long, but the minute options start trading, you're in the dark. You don't know how many options exist anymore. That number isn't reported till the end of the day to operate by all the firms. So we know what the hedge pressure is in the morning exactly, and there's just never enough trading in the day for most days to really move it. But towards the end of the day, hedge pressure could be like 1 or 2 strikes off. You don't know, which is why in the last 2 hours we don't really trade anyways. Once the volume spikes up, you're too much in the dark to really consider it really heavily. So ideally is that, like, assuming hedge pressure stays put, which it does pretty much every day. There's so much money wrapped up into all those options. It's very rare that you'll have, like, an example, at the money, 10,000 open interest calls, that you'll have opened 50,000 calls or 20,000 calls at that same strike that day for that expiration, right? So, chances are that it's pretty much anchored for the whole day and that volume should decline, but you don't bet on the volume spike itself. Just when you see that volume spike start to decay, that's when you want your position. There's a video we made that says all volume has meaning, and there's a whole trick to what volume does. So the idea is that when most people are trading, right, they're going to look for volume to give them indication on where to buy or where to sell. So an example is if I said I wanted to buy at 36.70 and I want to see if the market's supporting my 36.70. So when the market or the price gets to where it is, let me draw an arbitrary like volume spike. Volume is like trading, and you hit this level and volume spikes up. So what you want to see is, imagine it like this. And I always say, like, you think about outer space movies, right? Is that like when you're flying through space, you're flying in a trajectory like this, and you need to turn, right? So you're going to turn your afterburners just a little bit, and it's going to start to curve you a little tiny bit. And the minute you turn off those afterburners, whatever direction you're facing, you just maintain your momentum, right? So what happens is, whenever that volume declines, it's almost like your afterburners are turning off. And when you get the volume spike, when you approach it, once that volume starts to taper off, which side are you on? Whatever side you're on is going to anchor the move. So if the volume declines and you're on the upside, that's what you want to see. You don't want to see volume into the move. You want to see volume at the level and then volume decay and you're on the other side. Because if you're on the other side, it's volume that'll be continuing the move down. It's not going to be volume that's going to push the move higher. So if market makers are lowering prices, they're looking for buyers. And when you get to that level, the volume spike are your buyers. But people aren't going to continuously just jump in and randomly buy huge amounts, right? If they bought, they're going to buy the minute you tapped, and that's it. So once the buyers step in, then during that kind of like hold the line time and volume's decaying, dealers are now, the algorithms, or I say dealers, they're all computers now, are going to say, well, there was a lot of buyers here. Have we balanced the day out? Where's the sellers? Do we need to find sellers? Need to find buyers? So as that volume's decaying, then the dealers are going to pivot the price higher. And if that volume goes away and you're just floating above here, then hedging starts to pick up, which starts to push prices higher and squeezing out shorts. Or if you're down here, hedging starts to go out. So what you want to see is volume spike when you hit the level. Watch it get right there in just a second. And when you get to that level, then you want to see what side are you on once that volume starts to decay out. And when that volume starts to decay out, you want to make sure you're on the right side of the trade. So the trick is trading with the decay of volume after you get to that area of interest. It's very much the trick. That's the trick to know that you're right or wrong on the trade. Let's pop NASDAQ up because it'll actually demonstrate that very rapidly. So when you hit the level, volume spikes up and volume starts to decline. As volume starts to decline, you start to see that the decline of volume, you're on this side. Okay, so it's really hard to gauge, but now you see that you're declining volume on this side. And so now you're on the wrong side of the trade. How long does it take? Like I said, market's random. You don't know how many ticks, how much volume, but just you're eyeballing at this level. You got that volume spike once you tapped it. Market went up, came back down. It's pushing lower and pushing lower. You can see right without 3 or 4 minutes that you're not on the right side of the trade. As the volume starts to decline, you're not getting that bounce you want. So that's just to tell you it's likely going to go lower. So let's test out this level, right? We have another impact. Good. What's up, guys? Good morning. What is the calculation used to convert SPY hedge pressure to ES? First of all, we have a conversion team. We have a volunteer team inside of our community that comes through and converts them all for futures traders. It's a very nice group of people that volunteer. By the way, if you haven't joined our Discord, feel free to go in there. I'll give you the link really quick. We are a massively active Discord. We have 650 people online, 3,400 actual people. So really big, probably one of the biggest ones out there as far as like real traders. There's no bots or anything in this group. So you have of our active subscribing members, like almost 200 people that are online right now, literally online right now. You can chat with them. These are all active paying members, and then lifetime members, etc. and such. All these people here, tons of people here. So feel free to join, check it out. We have all kinds of community involvement. People volunteer, provide all kinds of information. The conversion is pretty simple. What you do is you go to, we use a 930 reference. You just convert just like you would anything else that tracks anything else. It's cross multiply. So whatever your value is, and we use the 930 value, just here. You'll take the value of NQ, for instance, an example, NQ futures now, value of QQQ at that same point in time. Take the 2, make a fraction. So it's essentially just cross multiply, right? It's going to be at open. So we'll do like at open. And you can make a spreadsheet. It's pretty easy. The spreadsheet will have 2 values. You'll just type in what was your opening price at both of these areas. So you'll say like, 11,349, I don't know, whatever it is, of NASDAQ. And then you'll go to QQQ and you'll find out what was the level of QQQ at the time. It's like Amazon's losing monthly hedge. Yeah, pretty nasty on that jobs data. I think this might be a nice low point though. Market's definitely moved 2 risk intervals, I think, so we're pretty good on this. NASDAQ open right here. Let's go right to 930, and it's going to be what, 275. Do you follow? Do you need me to do the math, or do you understand? Pretty simple. There's no drawing tool. Yeah. So 275. And so that's at the open. So then you'll have hedge pressure, right? So whatever hedge pressure ends up being, that's a fraction. So you're just gonna cross multiply 273. And you can make a little tool, like a little spreadsheet that does it. But also remember, we're gonna have that module for you in here at some point. We just need to get futures data. We have a trick on how we can do it though, which is gonna be nice and cool. I can't tell you the trick, but we have a really neat trick on how we're gonna do this. It's just understanding of the mathematics of options and things. So we'll have a cool way to do it. It's just the project teams are pretty much slammed right now. But I'll let you guys know, we have hired, we're hiring 2 senior level engineers, equivalent to Amjad. So Amjad, who's basically built this platform as the lead engineer by himself. Well, not by himself, but like led the development by himself. With other developers. We're going to hire 2 more guys at his competency level. So we'll be able to take our current sprints, run like parallel. We have 4 sprints. Essentially the stuff you guys want to really look at: UX, UI. We just hired an intern to maintain our UX, UI stuff, which is kind of cool. We have standard features, platform standard features. This is our new sprint, by the way. Standard features are going to be the things you guys are asking for, like, hey, can we get a DOM? Can we get a watch list? Can we get news? Standard features would be the normal stuff that a platform comes with. User settings, save your colors, draw on your charts, all that stuff. Standard features, right? We're going to have a standard features guy that's just going to come in and unlock what we bought from our white label. So essentially, to skip a bunch of steps, because our standard features are what you guys want, but our platform clearly has... the focus is all of our technology. So it's like, we're going to call these custom tech, right? This is the main thing, custom tech. This is going to be your scanner, hedge pressure, dynamic hedge pressure, green lines, all that stuff. So custom tech, right? Our main head of development's been bouncing between all these things. And you guys really, like, I want you to all give Amjad some love and some props anytime you see him. He has been killing himself over this project. He actually, is passionate about this as I am. This is his baby. So, anytime Amjad helps you guys out, you pat him on the back. The guy works so hard. We need him to focus on just the custom tech. So right now he's making scanners and stuff, scanner strats. We have somebody UX UIs coming here and cleaning up some of this. Standard features are going to unlock, like the multi charts, which is what we were doing at the same time. And then we have our, which I'm not going to detail what this is, but I'm just going to say BB. This is another team that we rarely talk about. It's doing a lot of customization on the back end. All of our black box technologies, all of our calculation stuff. For instance, hedge pressure comes from somewhere. We have an entire team inside of a Fort Knox that builds that. So essentially we hired, like, I'm jods and bouncing around all these things. We hired a leader for that, and the third person can do anything really. So we're gonna be able to pump out features like at, you know, massive improvement of the rate. So you guys be really excited for that. We just interviewed them this week and we're super pumped and thrilled to be able to share that with you guys. So feel free to always give our devs and our techs some love. They work super hard. I mean, we did build this platform from scratch, right? So we are skipping steps so we can focus on our custom tech, which is why we sourced TradingView for a lot of the standard features. We don't need to waste our time creating a charting module and a dominant watch list. Like, stuff is standard issue, so we might as well just, you know, purchase that and be okay with having that on the sideline. So as you guys go in that, there's a place in our Discord, which I want you guys to just focus really quick. It's going to be called Software Wish List. You're welcome to come in here all the time and post your ideas. Our project team just went through some of them, and we come in here. We want windows to pop out, multi-charge, things like that. Come in here, put in mock-ups, we listen to them. We're planning our 3-year roadmap right now, so we're gonna staff people up appropriately for the things y'all want us to build for you. So we love you guys. Love y'all so much. Let me get this super quick. Do me a favor. Love you guys. If y'all could take this tweet, I don't know if y'all are out there. I have this little tweet here. Give a little retweet if y'all don't mind. Love y'all to death. Okay, give me 2 seconds. I'll start looking at some tradey trade stuff. I know, I feel like I'm hurting my neck from like looking up so much. Okay, 1 second. Okay. Okay. Any questions about the irrational stuff? Make a video today to talk about irrational market. Oh wait, I know what I'm doing wrong. All right, let's go here. New. This is why. We'll share this on our Reddit page. If you have any Reddit page, make sure you guys go follow all of our stuff. We're going to be pumping out our content starting next week. This is like practice week. Let's see if that works. There it works. Okay, perfect. You want to do a video on irrational markets today? A special video on irrational markets. Let's go. Okay, let's find some plays. Conversions are listed in Discord under morning conversions. Yeah. So, right. And so the conversions are done by a group of teams that have been volunteering. They're super nice about it. So really love those guys popping in here. Okay. All right. Let's focus now. Let's take a look. Remember, irrational markets. We'll go through those 5 signs of what irrational markets are. Actually, I got an idea. Curious if you can see this though. If I do zoom, I'm gonna try to be extra fancy here with something. I'm gonna start like a Zoom meeting. Hold on, I'm not gonna teach all my tricks here. I'm gonna start a Zoom meeting. It's a meeting of 1. See if I can share my screen. Don't share the sound, that way it doesn't pick up the music. Now, if y'all see a green line on the screen, let me know. Y'all see that green line from Zoom? Ah, it does show up on the screen. It's showing up on the screen for you guys, right? A green border. I was like, because I can now have Zoom playing at the same time. Well, that sucks. Okay, let me think how I want to do this. What's kind of... Okay, and... I wonder if there's settings on like... My encoder can capture the window instead of the stream. Let me try that really quick. We'll try to trick you guys. Don't go anywhere. Add source. Someone. Not the monitor. I can just capture the platform though. Or a portion of the window that's not that. I need to have Zoom eliminate that green bar. We'll play with it later. So what I'm gonna do right now is I'm gonna get my handy dandy pen right here. And I'm actually write down about what time we're gonna talk about this. Okay. Don't go anywhere. I'll be right back. I'm gonna take a quickie little break. Give me 5 minutes. We will be right back. Don't go in here. All right, we're back. Hold on one second. I had to get me a snack on real quick. All that talk about food, I was certainly getting hungry. Okay. Right. Back. Don't want to lose anybody here. Welcome back to the stream. Where's the music? Are you still watching? Yeah. Let's have a session today on irrational markets. So what I'm going to do is I'm going to write down the time. I can remember where I did this. Okay. So in an irrational market, this is something I just want to make sure. Hold on. I clarify with everybody. So when you hear me say the words irrational, let me go back to here. Okay. So when you hear me say the words irrational, what irrational means is that the market itself, no matter what it is, no matter what you're trading, a stock, ETF, futures, whatever, it means whatever it's doing is going to be very unpredictable for the reason of the dealers on a net sum have kind of like lost grasp on where liquidity is. It's really hard for them to gauge where buyers and sellers can be. You know, when there's a good news event and everybody's buying, you can understand that, you know, you're going to raise price until you find sellers, or there's a bad news, you know, lower price until they find buyers. And that's typically how, you know, the path to finding liquidity is. And, you know, as our platform specializes in finding liquidity in all of our calculations, our volume predictors, which actually sniff out liquidity as well. Irrational markets are where it's very hard to find liquidity. So we don't even try. We kind of take this stance of it's impossible to know. So we don't even try to push it, and we'll kind of stay away from trying to make any hard, heavy, rash decisions. I like to trade nice, stable, rational markets. So we have different rules here. And if you go to our Discord, you'll see it. Make sure you guys go there really quick. I'll give you the link. It'll be in the description below, but here's the link in chat. Make sure you go to the Rocket Scooter Discord. Yo, what's up, Maddie? It's good to see you today. So you're the man. It's my buddy Matt. Feel free to give him a follow. Also a YouTuber. So right here. Hey, how'd you like this? By the way, how'd you like the setup? See, now this is all like the green screen in action and everything. So now it kind of looks pretty sick. Matt came over, hung out, what, like last weekend, right? Was that last weekend? When Sim and Mona came to town. John Song. You guys know them from Twitter. We went and hung out with them Friday. Was it Friday night? Not last Friday. Oh, thanks, brother. Love you, man. Okay. So here, make sure you go to the Discord. I'm going to start over because I kind of want to like clip this and make this one of our educational things. So if you come down in our Discord, today we're going to talk about irrational markets, since this is one of the things that is very important to today's trading session. So in these strategy guides, we have a list of a bunch of basically, you know, quick reference material. And of course, we have on the Rocket Scooter website, we have a bunch of educational videos that talk about all of our calculations to find volume. Remember, the pursuit of liquidity is finding where buyers and sellers can be. Traditional technical analysis uses the shape of price and direction of price to try to predict future price. It's kind of really, you know, the audacity people have to try to think you can predict the stock market with some colored lines and some shapes. I think it's always been silly. So liquidity is the pursuit of finding where volume can be. And it's very easy to find where volume can be if you know how to do it. We have 12 different calculations. The 13th one in beta and 14th come down the pipeline. They all predict where volume can be. If people buy an option, a call at some strike at some point in time, they're telling you they want to be long at that strike at that point in time. So they're telling you when they want to have risk. That is showing you where someone's going to be buying shares at a certain point in time at a price. I mean, it's as transparent as you can get. So, you know, there's things out there to let you find volume. And that's all we look for, is we show you where the volume will be before it happens. So we look into the future. We don't look into the past like technical analysis does. So liquidity map is our main focus of our technology, which is showing you based on market maker options where the quickest path to liquidity can be. It's our main technology here. But we also have other calculations that have very little to do with options. They have to do with a lot of other things. And so in trading strats, you'll see those calculations listed all right here. There are irrational and rational market checks. Irrational market has a set of rules I follow. For instance, when the market's irrational, I don't use liquidity map anymore. I need the market to be rational to make a lot of sense for me to believe that the market has an easy to follow path to find liquidity. Irrational markets, it's buyers and sellers are everywhere and all over the place, so it's really hard to find. These are usual and unusual markets. It's kind of like a gray area of me taking a caution. Usually in here, I'll take smaller positions or just, not really play too hard on these unusual market checks. And then these are all my pivot equations that I use. So every morning I just make sure that the market's not irrational. And then I'm saying if it's rational, okay, check, let's go. If it's usual market, I'm ready to hit pretty heavy on whatever I'm doing long or shorting. So unusual, I'm like, let me maybe like take one, really small position or whatever. And these are my equations. So the stop rules will show all the things that have me stop no matter what. They're all listed here numbered. The irrational word is the trigger that is very important. It's important to today's subject. So no matter what I'm trading, bold letters right here. If I flag the irrational market flag for any reason whatsoever, get out, stay out. I click the most important trade I ever can make in my life, which is this little X in the top right corner of your platform. This guy right here, click it as fast as you can, and what will happen is your platform will close down and stop being a fucking idiot and over trading, right? So learn to click it, close it down, and walk away, and don't care for the rest of the day. And then come back at the end of the day, and then look where the market is and be like, huh, man, I would have totally been so wrong on that. I thought it was going down and it came up, and I thought it was flat and it just rallied and sold off. Irrational markets, statistically, as we've proven mathematically, are unpredictable to any degree with any type of analysis. So if you were to pick where the S&P is right now, I'll challenge you right now. Look at the S&P. I want you to write down on a little piece of paper, get a little sticky note, write down on a piece of paper, where do you think the market's going to end up today? And then come back at the end of the day and see how wrong you were. And that should scare you out of trying to do something in irrational markets. We give you very solid calculations. It's not just like, maybe this, maybe that. It's like, this is the exact number. And I'm gonna go through each 5 of the main ones that we have, and this is right here in the stop rules. Okay. So some of the numbers it references will be down here with the bots. So the bots will provide the number, or Rocket Scooter platform will provide the number. Either case, the number is automated via algorithmic method and delivered to you in one of the 2 ways. So soon everything will be in Rocket Scooter and the platform itself. Until then, we have some shortcuts as we can only develop so fast. So right here, you're gonna have a bunch of bots that I want you guys to see. Overnight, we have one called the Dynamic Hedge Pressure Bot, which tries to predict hedge pressure in the morning. This is based on a real-time open interest model that I created that tries to guess what the real-time open interest will be before Opera releases it at midnight. This is groundbreaking stuff. Futures traders and positional investors will want to look at this bot. At the end of each trading session, this overnight is telling me what I can expect somewhat overnight as an estimate, and I'll plan like my puts and calls to hedge my investments against, or I'll even trade futures against that sometimes. Risk interval is one that you'll see referenced a lot, and that's going to be important today in this lesson. Yellow lines is one of the pivoting equations, and this gives you that. And doomsday is an irrational equation as well. So we'll talk about risk interval today, just very quickly. And so this bot is made every Sunday. We update the numbers once a week, and the numbers are based on a protocol that the CME group created called SPAN, which allows clearing firms to set margin requirements for futures contracts. And that sounds like a big jumble of words. Essentially, how much money you as a trader got to pay, put in the bucket to be able to buy one of these futures contracts. That number is very meticulously chosen based on expected volatility, solvency of market makers, things like that. There's a whole bunch of protocol that goes into it, but this is an exploit of that particular range, and we know that there's hedging on those distances. So risk interval plays 2 really, really key components into our trading strategies here. So when I go into stop rules, right, you will see that word written a lot, and we call it a risk interval so they can like flag you mentally that there's something risky going on. So the first and foremost, the easiest thing to understand is when VIX itself, right? VIX is the volatility index. So when you look at VIX futures, which try to price in the index a month out, travels, or at the expiration, when the VIX futures travel more than this particular number, above the low or high of the Globex session, a little worded weird. When the VIX travels more than one risk interval total in the Globex session, from the high or the low. In either direction. Actually, better way to say that. In either direction. Session. While it's beyond 1 RI, it's irrational. What does that mean? Well, let's just not go too detailed into the theories behind risk interval. They have videos on that. But you come to the bot and it gives you just a number. And I pre-prep my chart every morning, $2.80. And every Sunday I'll get that number refreshed. Let's go to a Thinkorswim chart where I have that front and center. Here, okay. Actually, let me not use that one. Let me use this. Oh, here it is. Yeah. So let's make this full screen really quick, and let's go back to the one that I have that is VIX. So I'm gonna double check on the VIX, and I take a little green band, and the way I do it in Thinkorswim is I will go and I'll use like the Fibonacci tool, Fibonacci retracement, and you can just draw your retracement here. And what I do is I just go in there and I edit it and I modify it. Like I just basically turn off everything but 0 and 1, and I make the distance, that distance in the bot, and then I just come here and draw a line. So essentially this is the fib tool that's just completely gutted. Easiest way to do it. So essentially I'm just drawing a ruler on the chart of a certain distance. As you see, I have a 0 and 100, just made them all green, and the distance is whatever it should be. So let's double check just so I can demonstrate how to do it. $2.80. We're going to go down to here and we're going to mark it. And again, I do this, once you learn this, it just becomes habit. Every morning it takes like 5 seconds to get everything set up. So on Sunday, I make sure my Sunday prep is always the same. This is what, $28.50. So 29, 30, that's $2.81. Maybe we're off like a penny. What is it, 280? Okay. So if I were to make this 28.50 and 280 would be 31.30, right? Okay, easy as that. Now I have this particular band. So what I do is I measure from the low of the Globex session. VIX is not outside of that distance. So this is just a ruler. How far has it traveled? Well, it hasn't moved that far. And let's measure off the high of the Globex session. Again, this is the high. The Globex session is from the overnight from 6 p.m. Eastern until the following 5 p.m. Eastern here. So from the high, it hasn't traveled. So it's the entire day is contained within that band. So check, VIX is not flagged at. It's good. So essentially it's a 1 second check. Every morning I come in there and I go, well, did we get there? No. And how do you know it's irrational? So let's show you kind of what happens. The market really loves to pivot heavy on these risk interval moves. Case in point, remember that big sell day we had last Monday? It's no coincidence that it fell exactly $2.80, and look what happened with the volume. Remember, our calculations predict volume. Bam, as you're tapping it, look at these volume spikes. The average trading volume of VIX, I think 200 and, is that thousands probably? And then it's trading at like, 4 times that as you're interacting with this. See, just the volume starts to rapidly pick up. I mean, it's almost triples in that particular area. So the VIX has a hard time pushing its way outside of that band because the market is very hedged there. So as a trader, you can see when it does leave that band, it gets really, really, really nasty. So I'll show you some examples of when it has done that. And even before, like, look, here's that same distance here. You can see that when you get there, when you break through that band, look how violent that volume gets, right? Shows we know what we're talking about. What exactly happened at 14 o'clock that day? Nothing, right? Breaking outside that band is huge volume. 2,000 against what? 400. Literally 500% volume increase. Y'all see how big that is? That's to kind of show you how the market likes to stay rational, and then outside of that band, you get that massive capitulation and hedging on VIX. So just remember, I'm going to show you what the market does when you are outside of that range. Let's kind of click to an hourly chart and let's find it. Now, every Sunday, just double check that the market has, like here, let's look at a great example of this one. Looks like that day went to the edge as well. Let's find one where it actually broke. Recent memory. Okay, this is a great example of that. Does everybody see on this particular day? This is a Tuesday. You hit it and there was that massive resistance and then you broke through it. Look at how big those candles get. Volatility just spirals out of control. You don't want to trade up in here. That's the idiot's place to trade. Let the market be crazy and you just go have a beer or something, right? So that goes all the way back to, let's put a daily chart and I'll match it up to what happened on the SPY. Pretty neat little lesson here though. That is going to be on the 13th of September. So let's go back to that day. I don't remember what happened that day, but let's go find out, right? Go all the way back. There's a Tuesday. This area here. Oh, Jackson Hole. All right, there you go. So as you see, let's go back to the other one. You're gonna have, remember we had VIX hit that risk interval band and halted for a couple hours, and the S&P halted for a little bit, and you think, okay, this market has dipped, but when VIX pressed outside the risk interval band, 40.17 all the way to 39.37, right? Let's talk about what is that? An 80-point drop, 90-point drop, right? 80-point drop. Another 80 points, right? Just because VIX became irrational. The market just had no bottom at that point. That's the danger part. So the reason we don't trade irrational markets, number one, is because you might think it's stalling out. You might buy the dip, and off of what, 40.17 all the way down into, I have my glasses on, 40. Yeah, like almost 80 more points. I mean, you could blow up your account on that particular setup. So again, these rules are here for safety. So boom to boom. So matching up when you're outside of one risk interval, kind of just sit out of the market, let it do its thing, and just don't try to be overly eager. That little tiny bit of extra VIX, just that much, was 80 points in the S&P, which is highly, highly unusual, right? And so that's why we don't play, right? Just this much alone doesn't seem like a lot, but you see how we had rapid volume increase. We're not lying. That number is solid gold, and we want you guys to learn these things. We publish them in our bots. So this volume spike that came out of nowhere 30 minutes before market closes is because of that. And the S&P just collapsed on itself. Do we all see that? Can you be all fat yes in chat when you guys see that? Right? Yes. Right? Irrational number one. Okay. Number two. It doesn't look like a lot, but just being beyond that, the market has no floor. And that's kind of the whole point of irrational market. You can't predict anything. It looks like it's stalling out and this continues to collapse, right? Okay. Number two. Let's go back to the Discord and let's go back to the stop rules. Number two, if the S&P opens outside of one risk interval of its own of the previous day's Globex close, we call it the doomsday bands. That is this little green line band. It's really much the same thing as the risk interval we just showed on the VIX. It's just for the S&P, but there's a different application. It's the VIX travels that much, it causes the irrational market. The S&P, the irrational market is if the S&P has traveled that much from the close of the previous day. It's a different mechanic, but from the close of the previous day, we take that same distance. And again, I'm just using, I wrote a little thing to just draw them. I type it in manually and then draws them. The S&P distance is pretty simple, 2750. So off of the close, there's a 2750 this way and 2750 that way. Anytime you were outside of the band, again, unusual volume in markets irrational. So there's one flag this morning. We opened right here outside of this band, right? The band is from here to here. We open out here, irrational market. And again, when you interact with it, there's always volume. So as you see, when you are playing with it, the volume starts to increase as you are tapping it. And then as you're breaking through it, right, that volume starts to decline as we talk about, and the volume has declined, and now you've stabilized outside of the band. And it rejects that area with high volume and then immediately just starts to fall. Now our market opened outside of the band, already opens irrational. So what we say is when market opens irrational, get out, stay out, sit out, chill. I'm not making any heavy moves right now or trying to do anything else. I've entered nothing new on the S&P today. Just waiting for it to do its thing. I'm not going to short it, not going to long it. I'm going to wait for it to do something though. So irrational flag number one. So when I get it, I just say, oh, okay, probably not a safe day to trade. I'm not going to come in here and try to guess what it's going to do. And I'm just going to let it fall and do its thing. So this one didn't flag the VIX one, but the S&P did. If UVXY is greater than a call wall, that's very simple. You go to Rocket Scooter and you just check what the VIX is doing. We use UVXY, there's a whole process for that, but just type it in. You're going to see if, as long as UVXY is in a call territory, which it is in the bull zone, not a good sign. So with the VIX being in the bull zone, again, that's also an irrational flag. So two in a row, right? Two things are saying sit out. Don't trade, don't trade. All right. Fourth one, a catalyst will exit both a winning and losing trade if one risk interval from the anchor point is achieved. So what do those words mean? Okay, let's go back to the S&P. A catalyst was here. We had non-farms this morning. The unemployment numbers came out, both of them. And so I measure, again, one risk interval distance from the catalyst impact. So the minute the catalyst happens, if a catalyst moves you more than one risk interval, then beyond that distance, the market's also irrational. And how can we prove it to you? Is that while we did have the S&P's band on its own without the catalyst, which shows normal hedging there, this has to do with the market catalyst being strong enough to change the direction of the market. How do you know that catalyst is strong enough? Well, it broke through the risk interval from the impact point. So it's not the high or low of the day. It's the moment the catalyst comes out from that point in time, measure that distance. It goes to here. And to show that we know what we're talking about, let's go ahead and go all the way over here. As the traditional, let me show you what we mean, comes through. You can see that you have an impact. Like the minute you hit that risk interval, there's the highest volume. Again, all of our calculations predict volume. No volume is meaningless, and I hope you guys are learning that here. Hit this exact level, and look, we predicted another volume spike. Boom. And then you come back and you test that level again with less of a volume spike, but again, you test it, and there's the rejection. So the catalyst is now in the effect of causing the market to trade lower. So we have 3 of our flags flagging today. Number 2, number 3, and number 4. When one of them flags, I sit out and stay out. When 2 of them flag, I'm sitting. 3 of them flag. I mean, there's like clear as day what's happening. So let's just recap what we've seen so far, so we can remember that. Is number 1, you have the catalyst rule, and I marked it just so you guys know where it is. So the minute we're below here, it's irrational below there. You have the doomsday rule, which is out here, and it rejected against that. So here is a rejection point, here's a rejection point. Doesn't look like we're just mapping out the market for you. All of these things have meaning, and all of these things are predictably meaningful, right? Nothing here is done after the fact. Everything's done before the fact. So the neat thing that you're gonna find here at our group is that every little pivot is almost like asking a question. Is this true or that true? Is this reacting, not reacting? All these volume spikes have meaning. Hitting it the first time, there was a spike in volume. Hitting it the second time, there's a spike in volume. Coming through, testing this area, volume ramps up. Rejecting, testing it again, volume comes up. So these levels are very important for the market. So irrational down here, irrational down there, both of them are very much in play. So today, there's a lot of signs that just say the market's gonna be really hard to trade. So irrational or cat here. Anything down here, this is irrational DD. Doomsday has to do with the idea that the S&P is tracking other futures around the world overnight. And so if they're trading down, we're going to trade down, but we're not going to trade down outside of the interval band unless there is a real reason for our market to trade down. So 2 irrational markets, irrational signs down here. There's 2, and there's clearly 1 there. So market inside of here is going to be very questionable and choppy, right? Nice and stable. You're like, oh, I think it's going to go up or go down. You know, your guess is as good as mine. Here's it going to go up or go down, or go up or go down. It's just choppy. It's really hard to kind of, showcase what it's going to do. Last rule, it says any break of hedge pressure or monthly hedge pressure of anything is also considered irrational. So what happens is if you get that immediate flip of those hedging boundaries, you go from like negative to positive gamma, markets just fly the other way. And I think we broke hedge pressures across the board in all things. So let's talk about the VIX. VIX has smashed through hedge pressure, monthly hedge pressure. So there's 4 signs, literally 4 signs. So do y'all see how this is very much like, which is the first of the 4 happens? And immediately out the door, those first 3 signs, I said, okay, market's irrational, don't want to trade anything or do much. Then I look right here, because those are irrational, the S&P just fell through the floor like it was nothing, like it was butter. And normally you'll see hedge pressure having resistance, right? So when any of those irrational flags take place, one of the things we do is we completely throw out liquidity maps and all indicators together. So let me see if I can find where it says that. When irrational, throw out all technicals and the liquidity map, and even on occasion like entries, market changing catalyst, even on occasion like entry entire market changing catalyst. Oh, anyway, so the point is that early resilience market is random at this point. Okay, so as you see, normally you'd expect hedge pressure to have a little bit of resistance or even you know, support there. When you would get there, you'd expect there to be a little bounce. Market was already irrational. You knew that the market's going to just fall right through it, so I wouldn't even touch that bounce. Does that make sense, everybody? Check, check. How are we doing? So do you see how normally in a bear short up, what I'll pick up the liquidity map and say, aha, I can buy monthly hedge pressure to go up to blue. Right? But I got 3 irrational flags, so I didn't want to touch it, and now we have a 4th one. Any questions you guys have, type your questions really quick in chat, and then we're gonna move on. Or is that a good explanation? Kind of gets boring when you have nothing to do, but hey, what we're gonna do, right? Always I'm like, is my mic muted the whole time? I'm eating a toaster strudel, so don't judge me. Okay. No questions about this. Okay. Okay, let's do some charts. So you guys will see all the flair and pizzazz for the show coming up next week. So I haven't even started, just the camera. This is the first part. But starting next week, we're gonna have a bunch of cool features on the show. So you guys want me to run some charts? For y'all, run some charts. Type in your ticker that you're looking at and let's go for it. Okay. So right now, I'd like to see the market recover just a little bit. But again, not really. I do like to see the S&P rescue itself. Now, in irrational markets, you can do whatever you want as a trader. As a day trader looking to scalp, the idea is that as a scalper, I'm not looking to guess on the direction or pivoting of the market. So you can take whatever risk you want normally. I don't bet on the sanctity of the liquidity map when that irrationality is kicking on. But what I do if I do make trades, I'm going to be very cautious about the size of the position. As I say, unusual markets, which we didn't talk about today, I'm very much like limiting the size. Irrational markets, if you're like, I'm going to take a YOLO gamble, I'm going to buy this dip because I know it's going to turn around, whatever. Don't be silly and like, you know, bet the farm. Markets can be crazy. It's expiration day. Whatever puts and calls you buy aren't going to pay out today. Let's go. Bear short down on Tesla. Remember, Tesla's just been trading lower since the announcement of Elon and Twitter. You know, all that stuff is back on the table and this market's trading down. Bear short down, out the door. Remember, irrational markets, we throw out liquidity maps anyways, but even so, there's just that downward pressure on Tesla. So let's find out where Tesla's going to land. Coming here to the walls portion. Coming here, we're going to do single date on the monthly date and see if there's any support on Tesla. 320. Nope. 245. No, we broke that. So really there is no call support on Tesla. We need to put up a bigger chart and see if we can't find any rational support somewhere else. And of course, you know, you have a catalyst moving Tesla. So let me make sure I move these bands here really quick. So it's hard to gauge the reaction of that catalyst. We'll see if an earnings call coming up next week. So maybe 2 weeks. But yeah, so as we go back in time, one of the best ways to do is you're going to go back in here and you're going to look for gaps to get filled. So usually your immediate targets are typically be gap fills, and Tesla has just been getting nuked. As far as where it goes, I always like to gauge my entry points or thought of an entry point at any kind of gap fill, and there are none. I'm just looking at the daily chart, trying to look for gaps that haven't been filled. And it looks like they all have been filled at some point. Yep. Okay, so we got to back up in time and some more lows. See where Tesla has. Let's go. Let's go right there. Y'all understand what I'm doing when I say gaps haven't been filled? I'm looking for a close and an open that has a space between it where no wick or no anything has been tapped. Let's make a white line and call it a gap. There's one there. One there. So you're looking for open and close imbalances, right? Where the dealer has a buffer to find some sellers or buyers. We're lowering the pricing. We're looking for buyers. You see any down here? I don't see any. Nope. Okay. All right. And those have already been filled, so let's go further back in time. Should have probably started down here. Okay. So we're just going to look for some like areas. If the markets are falling, right? We got to find where's evidence of a buy imbalance. Well, let's find a gap up that hasn't been filled. That's great evidence of buy imbalance, first and foremost. Any point back in time where that has happened. So let's check this little region of old Tesla here. And it's very clear that external to the current range we're trading in, there's an area of interest. Like I say, my first and foremost, I always say, okay, I'm not buying. If we're falling on a catalyst, what's going to make buyers just immediately rush and step in right now? Well, nowhere. So I'm going to wait and be patient for these gaps to fill. I always look for that, to hit them, to fill them, to overshoot. And then we have a pretty decent buffer all through here. And then let's go way back in here and let's see. All right. Closing price there. Oh, yeah, that still counts. So in reality, that's all you can really do at this stage. Right? So just mark them, find them, and then of course now you have a gauge of where Tesla can land. Now it doesn't mean it's going to land there, but the question is, if I break through lower lows and keep falling, then I've got some pivots to play with to look for interest there. How do you set the resilience graph under charts? I have to open the classic app. Oh yeah, so you go here, open up your Rocket Tutor platform, and you go to indicators and you type in resilience. You just add it, boom, and it's right there. Easy as that. It should load by default, but if it doesn't, save it and it'll save it for you next time, I think. Okay, yeah, so that's the Tesla chart. And let me get back to like the original. Like really, there's just no indication of anything stopping, and like Tesla's looking pretty gross, like 187, 188 to kind of fulfill that. That scares me. But hey, but you'll see, right? So I remember, rational market, there's not really a lot to go off of today, so I wouldn't make too many, personally, like I'm not making any huge decisions on any stocks today as far as value goes. You know, it's expiration day, market's gonna be a little kind of crazy anyways. No call support. So right, we have this. So looking solid there. Cool deal. Okay. Looking good, looking good. Get you guys being here. Okay, boom, 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 boom. Okay. Let me see if I can hear any more tickers you guys want to look at really quick. They're all gonna be a similar boat, so okay. Let me go ahead and run the scanner really quick. Let's look at SPY. Make sure things are okay. I'm in the boat that we are going to actually, bad news is going to turn good news, and I hope it happens today. I'd like to see SPY recover on hedge pressure itself. As a matter of fact, why don't I have some fun with this? Let me pull up a product ladder here. Let's look at some SPY. Let's look at some monthlies, and let's look at some. If I did get a 370 run on monthlies, SPY 370s, ooh, those are super expensive for the 21st, and IV is gonna be a little higher now, so 370s for the 24th are $7. about the 17th? Let me look for like a week out. Let's do the 14th. Why do next Friday? So many. Let me try something here really quick. Okay. I'm going to prep for hedge pusher break on some SPY calls here. Again, irrational. I'm not trying to look for day trades really to kind of bet on things happening. But if I do get a monthly hedge pusher break that can squeeze the market back to being rational, I might like to take that entry on it just on a longer fundamental swing. So like no day trades for me to like long or short today. I'm gonna take a positional trade just to bet on that break. So let me find where all my stuff is again. Just reconfigure my platform here. Yeah, no problem, man. We pass through 375 and we'll do some positional risk right now really quick. Okay, so do some analysis. Remember, playbook is not so not huge guarantee on playbook at this point in time, but any press from here to here is certainly a trade. With resilience less than 0, that is resistance, but you can see that some of the stocks are actually starting to pass through their half gap and trade to the upside, so it's actually not looking too terrible. But a trade from here to here isn't so bad. 370 isn't that too terribly far of a distance on the S&P. 375 would be even better and cheaper, but I think if I put it a week out, 370s would be nice, but I would get some decent percent on some 75. So let's run SPY. Let me double check where 375 lands on the chart. Yeah. That's not the right chart. I'm gonna look for $375 would be the halfway point between the gap. That's actually a decent. Make sure I get that right strike. So I'm gonna find the half gap. That's always typically one of the testing areas. So we're gonna go to here. To 371 is the half gap. Okay. Give it a little more time here. I'm gonna try some 375s. That market starts to bottom out. Okay. PVN? Yeah, no problem. So let's see right here. Get to that 367 to 370 would be a nice little spot to go on. Okay, so Ali has some things looking at TLRY. Let's pull those guys up. bear short up. I think most things are going to be in that kind of same particular setup. I think he was talking about some of the weed stocks today. Did you see? Yeah, they're all in that same setup. Okay. All right. Good morning. Good morning. Okay. Let's take a look at NFL Lisa or Deviant. Okay. Let's go. Deviant is in a bull long up. That's actually a really interesting setup here. Let's pull this up on the functions right here, and let's put it in the walls and look for some monthly mode walls here. Unfamiliar with the mechanism of this move. 73, 72. I mean, it's pushing higher with really no stopping point. It's looking really solid. So let's kind of pop this guy up here. Let's see if I can't find myself a daily chart on this one. Has to be filled. There's clearly a gap up here to be filled. So let's mark it. And here's another one. We do this gap analysis. The first thing you always want to do. It's fine, by the way. That's a good play. Are you in it? Two gap fills here. Looks like they're going to be at 74.14 and 77.87. 74.14, 77.87. Let me make that green. Nice play. Yeah, it's looking pretty good. I like it. Right, nice job, nice job. DVX, okay. All right, CVX looking pretty solid here. Like I said, long down. Again, we're not too heavily invested into the liquidity maps, and the markets are irrational. But some stocks that do move on a catalyst will have that ability to detach. Obviously, we've been watching Devon, we've been watching Chevron. These are big plays. You know, obviously we're looking at oil prices have been moving. We're back in the 90s again. So with oil prices moving, yeah, energy companies are gonna be moving. It's pretty much the same setup again as similar to Devon. So let's go back to right here. VX. Find some gaps, fill some gaps. You know the drill. They're almost at the same spot, relatively speaking. Actually, I think that looks like that did fill. Okay, so nothing too exciting today, honestly. We have expiration for the week. That's probably open just a tad little bit. So market's probably going to bleed out some options. There's any kind of reversal or play. It's likely not going to happen until the last couple hours of the day, as the options tend to slide into that final couple hours, so that the acquisition of the shares. Please, 164.7. Okay, so we get that BLD 164.7, similar move. All the energy stocks moving there. You see how things kind of lump together, right? The market's not really, the market's just moving kind of like as a herd. People are getting in and out of certain sectors. So BLD has that same little push liquidity map that you want the in push. BLD, pretty nice. And then that target is a gap fill like we put there. It is at 164.70. Well, price is on the move. Let's go today, right? Deal, you guys. Looking good, looking good. Okay. Alt quits in just a little bit and take a break. We'll come back later. Educational video maybe will be published. Make sure you guys go while you're here. Go here. We're gonna put out little 10-minute videos, 15-minute videos explaining how to use the platform, other things. So I want you guys to make sure you go and watch them. So the best training you're gonna get on Rocket Scooter is going to be the videos we make right now, and I want you to go check it out. We made a first training video yesterday, how to use Rocket Scooter, the basics, with old handsome gentleman himself right here. See homeboy right here, look at him just pondering what he's gonna do with this trading day or his platform. Make sure you guys go here, check out how to use the basics. Get up in there, check it out. Just at least go watch it, go like it, go say something about it, who knows. But we're gonna make a series of how to use the platform, and they're gonna be really small, really nice videos. Take a look, watch them, check them out. We do love the idea that we are able to share things with you guys and keep that fresh. Okay, it's now 10 o'clock in the morning. Been streaming about an hour and a half. I think I'm gonna call it quits in a little bit. We get like 45 more minutes, so just hang tight. I'm probably going to take a little bit of a break again, and then I shall be right back. So don't go anywhere. We'll come back and we'll do something new. You watch, I want to cover while I'm gone. Yeah. So SPY has the least negative resilience, so we're going to make sure we keep an eyeball on the SPY today. Deal. Okay, be right back. Okay. What's going on here? Let's take a look. Revisiting data from today. We had, I know when I said there's going to be a knee-jerk reaction, possibly a down day for Friday. I think the overall sentiment of the market having better jobs data is actually bad for the market, and good jobs data is bad jobs data is good for the market. Now, the reason for that is we talked about yesterday is that Wall Street is very much concerned with the activity of the Fed. The Fed will be very hawkish as long as the unemployment rate stays low. The Fed is going to continue to dial up tightening on their policies or not loosening, slowing down the rate hikes, things like that. As long as the employment data stays good, unemployment rate is still low. It's a very, the forecast is 3.7, came in at a huge beat, so the market's coming down. And again, we were the first people to say that bad news is good news and good news is bad news. And you see while like the non-farm payroll rate is starting to taper off, means that the market, that the jobs market is growing slower. That's bad news, right? Like, not bad news, but like it's not like expansion news, right? But the unemployment rate in general still staying low is actually, you would say, well, economics would say that that's a pretty decent, piece of good news. So why is the market trading down? Well, as long as the market's good, the Fed's can continue to tighten, and Wall Street is just behaving on the idea that the stock market's not going to reverse until the Fed loosens up on their tightening, becomes less hawkish. So we're just seeing that effect right now. I am looking for the market. Literally, I am taking the bet that the market is not going to crash from here. I think that by the end of the day, what I would actually like to see, I wonder if I should put my mic like on that side. I'm going to explore this next time, having my mic over here. That way it's not like in the middle of the camera. You know what I'm saying? Okay. We appreciate you guys tuning in today. We're glad to see y'all all here. Make sure you go to the Discord. Make sure you check out Rocket Scooter and get on the free trial while you're at it. Check out into this Discord here. You go over here. You should check out the website. We will see y'all later. Yeah. Okay. Let's let the market do its thing. I'm going to come back. I'll probably touch base in the middle of the day or later after we see the market move a little bit. Oh, I need to get my car today too. Forgot about that. Wait a minute. So check out the Discord. Go get the free trial real quick. If you have any questions, send me a message. We love you guys, and we will talk to you later. Thanks for tuning in. All right. Adios. Okay. Have a good day.